Assalamualaikum warahmatullahi wabarakatuh. I am Adib bin Muhammad Zaki. My matrix number 1202368, and I am the leader of this group. And today, my team will be presenting group assignment reporting for corporate and accounting reporting 3. And this is the member of our group. From the left is NAJMUDDIN bin ZAINORDIN, and Muhammad IQBAL bin DARWIS, AMIN MUQRI, Muhammad SHAHMI HAFIZ, Muhammad SUFYAN, and last but not least, me. Alright.
Hi, my name is Muhammad Sufyan bin SHAMSURI, matric number 1202377. Okay, question A is about objective reporting by segments. Okay, the first objective of segment reporting is to present information to creditors and investors about the financial performance and position of a company's most significant operating units. This information will help the company to make decisions. For example, segment reporting disclose information regarding operating, investing and financing cash flows of each reportable segment. Okay, the second objective is provides information to the stakeholders about the important units of the organization. This information helps them to evaluate and make decisions about the investment. Stakeholders can make informed investment decisions if they are aware of the revenue, expenses and other ratio of each business unit. The next objective is to make the accounts more transparent and understandable. This is important for analyze potential investors and other stakeholders. It because they need a comprehensive to assess a company's growth and sustainability, as well as to monitor the management's performance. Okay, and the last objective for segment reporting is helps to analyze the more profitable or loss-making units. For example, when a company operates in different categories or geographic areas, segment reporting can show which areas are profitable, which are drains on the bottom line. Okay, that's it.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad IQBAL bin Darwis. My matrix number 1202374. I'm presenting the question of B. Discuss the benefit that could be sought by an entity that obtain control over another entity. A parent is an entity that obtain control of one and on more entity. An entity that is controlled by a parent become its subsidiary. A parent with all its subsidiaries form a group. A parent company structure offer many benefits not only to parent but also to their subsidiaries. First, increase in revenue. Parent company often receive a percentage of their subsidiaries' profit. This payment can allow a company to increase its profit through its subsidiaries' operation. Second, increase market share. Acquiring a similar company can allow a parent company to gain more customer and market share by working through its subsidiaries. It can also gain access to new market by acquiring companies that provide different products or services. The third one, tax advantage. In some areas, subsidiary company may reduce the tax burden of the parent company. For this reason, some parent companies operate subsidiaries in other countries or states to protect their profit from some kind of taxation. Last but not least, image. The parent company subsidiary relationship can often give marketing benefit to both parties. It can allow subsidiaries to benefit from an established company image and marketing program, and may allow parent company to create new and diversified messaging for different market. That's all from me.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HAFIZ bin SUPIAN, metric number 1202400. Okay, for the next question is, why it is important to identify transaction as current or previous period transaction? The answer is, it is important to distinguish between current and prior period transaction because current period transaction affect different accounts than previous period transaction. I give an example. For example, current period inventory sales to revenue and the cost of sale account. Previous period inventory sales to retained earning.
Next is the purpose of currency translation. First, evaluate business performance. All company asset, liability, and equity will be translated to the local or functional currency for the accounting assessment. Okay. When a company have a subsidiary company, they will collect all financial data to translate to the local currency or the currency that used by the parent company to know the financial position such as asset, liability, and equity. The second one is profit or loss calculation. Okay, this is also important when the company will collect all data from the subsidiary to calculate their profit and loss. Okay, all profit and loss resulting from currency conversion will be included in the comprehensive income. Okay, this include also with the effect of exchange rate. Okay, when we do the currency translation, of course it will affect the exchange rate. Okay, so this also will cause the calculation in profit and loss. And the last one is attract global investor. Okay, especially when a company have do the currency transaction in their financial report, this will easy for the investor to do analysis. Okay, this will result in large fund for company to operate in large scale because this company is watched by the global investor.
My name is MUQRI bin MOHAMAD, metric number 1202370. Now let's move to the next question. Why do companies need to disclose related party transaction? First, they may affect an entity's profitability and financial condition. Related parties are able to engage in transactions that will not be available to unrelated parties and at amounts that are different from what would be agreed upon between unrelated parties. For instance, in the infamous Enron scandal, the company used related party transaction with special purpose entities to help conceal billions of dollars in debt from failed business, venture, and investment. Second is to avoid conflict of interest. This is because some transactions that favor the hiring company's close associate have the potential to cause conflict of interest. This could possibly have an unfavorable influence on how the other person acts. Related party transaction may occasionally need to be approved by the board or director or management. In short, these transactions have diminished competitiveness in the market. Lastly, a related party transaction might also take place without accounting recognition. An entity might, for instance, obtain free services from a connected party without recording that fact, while not offering accounting or measurement guidelines for such transaction. This nevertheless necessitates disclosure of such transaction.